Imagine a skyscraper in Houston, Texas, a glass monolith reflecting the boundless ambition of the late 90s. Inside, the air was thick with the scent of expensive cologne, unbridled arrogance, and the electric hum of money being invented out of thin air. This was Enron, a company that didn't just sell energy, it sold the future. At its peak, it was the seventh largest corporation in the United States, a titan of innovation, a darling of Wall Street, and the undisputed master of the American dream. But behind the polished marble floors and the soaring stock price lay a foundation built on shadows, smoke, and a sophisticated architecture of deceit that would eventually collapse, taking billions of dollars and thousands of livelihoods with it. Yet, the most terrifying aspect of the Enron saga is not that it happened, but that the very mechanisms used to orchestrate this colossal heist remain embedded in the bedrock of our modern financial system. We are living in a world where the Enron Playbook is not just history, it is a live-action blueprint for corporate survival. To understand how this fraud was perfected, we must look at the birth of the mark-to-market accounting method, a deceptively simple accounting trick that allowed Enron to book projected future profits as immediate realized gains. Imagine you are an artist who paints a single canvas and, before even finding a buyer, declares the expected sale price as profit for the current year. If that painting doesn't sell for that amount next year, you simply paint another, more expensive canvas to cover the loss. This was the heartbeat of Enron. It was a cycle of hallucinated wealth, fueled by the desperate need to keep the stock price rising. Because in the world of high finance, a falling stock price is a death sentence. The executives at Enron, led by the charismatic Ken Lay and the analytical Jeffrey Skilling, understood human psychology better than they understood the energy markets. They created an environment where dissent was crushed, where the brightest minds were incentivized to lie, and where the culture was so toxic it felt like progress. They were the architects of a house of cards, constantly adding new stories to a structure that had no foundation, confident that the wind would never blow hard enough to tip it over. But the wind did blow. And when it did, the collapse was absolute, exposing a reality that was far more sinister than anyone dared to imagine. As the company unraveled, the world witnessed the systematic destruction of documents, the manipulation of energy prices during the California power crisis, and the cold, calculated abandonment of employees who had poured their life savings into Enron stock. Yet, as we peel back the layers of this corporate cadaver, we find something unsettling. The regulations that were supposed to prevent another Enron have been systematically diluted, lobbied away, or circumvented by creative financial engineering that would make the architects of Enron blush. Today, we see companies operating with the same opacity, utilizing special purpose entities, those infamous off-balance sheet vehicles, to hide debt and inflate assets. We see the same reliance on credit rating agencies that are paid by the very companies they are supposed to monitor, creating a conflict of interest so profound it defies logic. The Enron Playbook has been refined, digitized, and integrated into the algorithms of modern trading. It is no longer just about hiding debt. It is about manipulating public perception through complex financial instruments that are designed to be incomprehensible to the average investor. We are living in an era of engineered transparency, where companies disclose just enough to satisfy the regulators while burying the truth in thousands of pages of legalese. This is not a relic of the past. This is the reality of the present. Consider the rise of companies that operate in the gray zones of technology and finance, where the lack of regulatory oversight allows for the creation of value that is disconnected from any tangible product or service. The hunger for growth at any cost, the obsession with quarterly earnings, and the culture of performative success. These are the hallmarks of the Enron era, and they are stronger today than they have ever been. The lesson of Enron is not that bad people did bad things. It is that the system incentivizes bad things to be done by people who believe they are the smartest in the room. When you strip away the complexity, the fraud was simple. It was the conversion of trust into cash. And trust, as we have learned, is the most fragile currency of all. The question we must ask ourselves is not how Enron managed to deceive the world, but why we are still allowing the same structures to exist. We have been conditioned to accept that complexity is a sign of sophistication, that if we don't understand how a company makes money, it's our fault for not being smart enough. This is the ultimate gaslighting. The reality is that if a business model is too complex to be explained in a few sentences, it is likely designed to hide the fact that it doesn't actually work. We are witnessing the normalization of the extraordinary, where massive corporate failures are treated as blips in the market rather than systemic warnings. We have become desensitized to the language of financial instability, viewing concepts like leverage, derivatives, and shadow banking as natural forces rather than human choices. But every choice has a consequence. Every time we ignore the warning signs, we are essentially signing a contract for the next inevitable collapse. The Enron Playbook is not just a story about a company that failed. It is a story about a society that lost its ability to discern value from vanity. We have built a world where the appearance of success is more valuable than success itself, where the market is a mirror reflecting our own desire for easy wealth, and where the truth is just another variable to be optimized. If you look closely at the financial headlines today, you will see the echoes of Houston. You will see the same desperate grasping for growth, the same reliance on opaque financial structures, and the same absolute certainty among the elite that the rules don't apply to them. The tragedy is that we are all complicit in this game. We demand returns on our investments. We want our retirement accounts to swell, and we are willing to look the other way as long as the numbers keep trending upward. We are the fuel for this machine. We have created a global economy that rewards the illusion of performance, and as long as that illusion holds, we are all part of the fraud. But the illusion is fragile. It relies on the collective belief that the music will never stop, that the next quarter will be better than the last, and that the geniuses at the top have everything under control. They don't. They never did. And when the music stops, it is not the executives who lose everything. It is the pension funds, the small investors, and the people who trusted the system to protect them. The Enron saga is a masterclass in the psychology of greed and the fragility of institutional integrity. It shows us that when you remove the barriers between ambition and morality, the result is always a void that will eventually consume everything it touches. The legal loopholes that Skilling and his team exploited haven't been closed. They've been paved over with new, more sophisticated regulations that only serve to benefit those who can afford the lawyers to navigate them. It is a system that has been optimized for the few at the expense of the many. We are standing on a precipice, staring down into the abyss of our own making, and yet we are still debating whether the glass is half full or half empty. We should be asking who broke the glass. The story of Enron is a mirror, and if you look long enough, you won't see Ken Lay or Jeffrey Skilling. You will see the modern financial landscape. You will see the institutional rot that we have chosen to ignore. And you will see the inevitable conclusion of a system that values growth above all else. This is not just a cautionary tale. It is an active warning. The mechanisms are still there. The incentives are still there. The greed is still there. All that is missing is the next catalyst, the next crisis, and the next company that decides to write its own version of the playbook. When you consider the sheer scale of the global economy, it is easy to feel small, to feel as though your voice doesn't matter and that the system is too big to change. But the system is made of people. It is made of decisions, and it is made of our collective consent. Every time we demand accountability, every time we question the narrative, and every time we refuse to accept the status quo as inevitable, we are chipping away at the foundation of this fraud. But the question remains, are we willing to pay the price for the truth? Because the truth is uncomfortable. It demands that we confront our own complicity. It demands that we stop chasing the illusion of easy money and start demanding the reality of sustainable value. It demands that we recognize the Enron Playbook not as a relic of the past, but as a constant threat to our future. If you think the system has changed, you are already part of the problem. The architecture of deception is more sophisticated, more global, and more integrated into our lives than ever before. We are surrounded by companies that are effectively living on borrowed time, sustained by cheap credit, and the blind optimism of a market that has forgotten how to be skeptical. This is the Enron legacy. It is a world where the truth is a commodity, where trust is a resource to be exploited, and where the only rule that matters is the one that says you should never get caught. But we are catching on. We are beginning to see the patterns, to decode the language, and to understand the game. The more we speak about it, the more we expose the mechanics of the fraud, the harder it becomes for them to hide in plain sight. This is the only way to break the cycle. We need to be the auditors of our own reality. We need to stop taking the word of the institutions that have failed us time and time again. We need to demand a level of transparency that makes it impossible to hide the truth in the shadows. The Enron playbook only works as long as we keep reading from the same script. But what if we decided to stop? What if we decided that the cost of the fraud is simply too high to bear? What if we redefine success, not by the stock price, but by the integrity of the business, the value provided to society, and the honesty of the reporting? It is a radical idea, but it is the only one that has a chance of working. The future of our economy depends on our ability to distinguish between real value and manufactured growth. It depends on our ability to see through the smoke and mirrors of modern finance. And most importantly, it depends on our willingness to hold those in power accountable for the consequences of their actions. The Enron story didn't end in a Houston courtroom. It is being written every single day in the boardrooms of the world's largest corporations. It is a story of human nature, of the corrupting influence of power, and of the enduring myth that we can cheat the laws of economics if we are just clever enough. But the laws of economics are as immutable as the laws of physics. You cannot create value from nothing.